Welcome back, everyone. In this video, we're going to talk about Satoshi Value and Candlestick Science. But first, great tool to use, coinmarketcap.com. So what this does, it actually shows the highest volume coins by volume, all of the cryptocurrencies on the exchanges, starting off with Bitcoin. So you can see Bitcoin market cap of a huge number that I can't even pronounce. The current price, $17,682. The 24-hour volume, that is absolutely huge. 17,719,900,000. Circulating supply, 16,727,000 and up 22.6%. So what you can actually do is you can literally take the circulating supply times the value per coin, and that's going to equal the market cap. So the supply times the price equals the market cap. So the available supply, what's actually been released so far, what's been circulated so far, times the price equals the market cap. So you can see that Bitcoin obviously has the highest volume, then Ethereum, and then Bitcoin Cash, and then this coin, and then Ripple, and so on. And generally speaking, not always, but oftentimes the coins with the highest volume are also the coins that have relatively higher prices, like Ethereum and Bitcoin and Litecoin and Dash and so on. So this is actually going to show you all of those different coins. I remember Dash not so long ago when I owned Dash for $20 a piece. You can see $675 now, even though it's a little bit down. So CoinMarketCap is a great tool to use to be able to see which coins have the highest volume, what they're worth, all the pricing, the 24-hour change, the market supply, all of that different stuff. And that's what market cap refers to. It's the circulating supply times the price equals the market cap. So tomorrow, after the miners have mined more coins and produced more freshly generated coins, people have bought more, it's circulated more, this market cap might be larger or a greater amount if the circulating supply increases and the price goes up. You see what I mean? Say the price went down to, say, $10,000 and the circulating supply didn't increase that much, while Ethereum's circulating supply increased more and the price went up, the market cap of Ethereum might top Bitcoin. Makes sense? Okay, great. And when we're talking about mining, for example, what miners actually do with coins, what actually happens is it's essentially your computers and software that has been written by the developers dictating, okay, every X amount of time, this amount of coins are going to be produced. What they're going to do to be produced is these miners, we're actually going to have people purchase the software or invest in the software, have mining power. Okay, so when these coins are produced, in order to produce them, they are mined. Mining refers to the process of extracting Bitcoins from the software, or extracting Ethereum coins or Bitcoin Cash or Ripple coins from the software. So the developers create the coin, and software and hard drives and computers and processors solve these complex algorithms to produce these coins. Each time a coin is produced, it becomes a little bit harder, it becomes increasingly rare to produce the coin, and then they're circulated into the market. So you actually have people that have purchased mining rights and mining power, basically the software that allows them to extract freshly generated Bitcoin or Ethereum or Litecoin from their computers, whatever the currency is that they're mining, to produce them into the market. Now, when transactions take place, there's what we call confirmation. So if you remember being over in Bittrex, where I said a penny deposit will go in, and once it gets 3 confirmations, it'll be a verified deposit, you'll be able to use that money to invest. Okay, verification simply referred to the process that miners have to use to verify transactions. So what happens is, say I send Bitcoin out of my wallet into somebody else's wallet. Well, in order for it to get there, a certain amount of miners have to agree that the Bitcoin is there. So what it actually does is it pulls the Bitcoin from the source, from the miners creating the Bitcoin. It pulls the Bitcoin from the source. So say I have a transaction that's 0.5 Bitcoin, 0.5 Bitcoin, and I'm going to send it. What it's actually going to do is it's going to take 6 miners, for example. It's going to divide that out, and 6 miners are each going to contribute whatever it is, 0.12 Bitcoin, and use that between all 6 of them, 0.12 each, or whatever it is, or 0.08 each, and they're going to take that, and then it's going to use that, those miners' Bitcoin, to send my transaction to the recipient. And then what it's going to do to pay the miners back, it's going to go, okay, well, the transaction's verified because the sender did have the money that he was sending to the recipient. Now we're going to go ahead and deposit that Bitcoin back into the miners' wallets and pay them a little bit of interest. The miners are what control the confirmation of each transaction, okay? So when we're talking about confirmations, we're talking about the blockchain confirming that the miners are confirming the transactions are happening, okay? Miners have to confirm the transactions. Typically in most exchanges and sent and received, it takes 2 to 3 transactions before a transaction is verified. So we won't spend too much more time on that, but if you see transactions and verifications, for example, you see verifications, that's what's happening. It's taking the Bitcoin out of the source from the miner's wallets, using it to pay for your transaction, then saying, yep, well, he did have the money, and then paying the miners back with freshly generated Bitcoin and paying them a little bit of interest, and that's where they make their money. So that's what verification process is when you are waiting for a pending transaction to finish verifying. It might say 0 of 3, 1 of 3, 2 of 3, 3 of 3, and then it'll be an active transaction and it will be available in your balance. So other than that, CoinMarketCap, great place to see the circulated supply, the price, the market cap, and all of that. Next, let's talk about Satoshi Value and candlesticks. So each one of these guys is what we refer to as a candlestick. We have green candlesticks, Japanese candlesticks, and we have red candlesticks. Green means it's going up in value, red means it's going down. Now we need to actually analyze these candlesticks and understand what each one of them means. Do you notice how it seems like they kind of line up? So this green one here, it lines up with this one here, and then right here it lines up with this one here, and this one lines up with this one here, this one lines up with this one here, and so on. That's because these are transitional periods. If you look down here, you can see 1400 hours, 1730, and so on. Each one of these candlesticks represents a 30-minute time period. Now I can adjust that. So you can clearly see there's a lot of activity going on in this coin that I screenshotted a couple days ago. Just in a 2, 3, 4, 5-hour period, for example. So what do these sticks actually mean? Green candlesticks mean going up, red means going down. Now, green candlesticks, what happens? Let's start right here. See this one with this long little bar right here, and then this candlestick's actually really tiny. So what happens is it transitions, it goes to form a new candlestick. Green candlesticks moving in an upward market. So green moving upward, they open at the bottom. So when the new cycle begins and a new candlestick has to be generated, they open at the bottom, okay? And what actually happened with this one, for example, this is called a lower shadow, this little guy right here. And then this would be called an upper shadow, this guy right here. So you got a lower shadow on a green bar, upper shadow on a green bar, lower shadow on a red bar, upper shadow on a red bar, okay? So let's start out right here in this one, okay? So what actually happened is transition ended right here. It opened here at the bottom, and then it actually dropped immensely. It opened here at the bottom of the green. It dropped immensely, okay? And then it started receiving some seller support. Sellers started bringing the market back up, selling more. Buyers started buying, and it started driving the market back up, okay? So we started buying the market back up, buying the market back up, buying the market back up, and then it actually passed its initial point. It's kind of hard to see in here. You can see it better right in here. So what happened is the market opens on the new cycle. It actually started to drop down in value. If it would have continued dropping, this actually would have turned red because it would have shown and proven that it's going into a downward recessive market, into what we call a bear market. But that's not what happened. It actually opened, it started dropping and dropping and dropping and dropping, and then it very quickly came back up, because you got to remember, this is only a 30-minute candle right here. So it opened at the bottom on the green. Green always opens on the bottom. It dropped down immensely, and then it came back up, started receiving support. It came back up. People started buying. And it came back up, came back up, came back up, came back up, and it came back up past its initial starting point. So that's what actually forms what we call the lower shadow right here. You guys need to be drawing this out, okay? As I'm talking and writing this down, I want you to draw this out on a diagram. So we start out here. we open on the bottom of a green candle. If it would have continued going down like this one did, it started going down. And if it continued going down, it would have turned red into a bear market. But it didn't. Instead, it came back up past its initial starting point, which actually creates the candlestick where we see this wider bar. And it continued to go up and go up and go up and go up. And if we would have been able to zoom in on this, we would have seen a little tiny little upper wick, upper shadow. You can kind of see one right here, okay? But what happened is it actually developed a little bit of an upper wick. If you look closely, you can see it. And then it came back down, right? And overlapped itself, thus starting the new cycle, which opened here again. It opened here. It went down briefly. You can see there's a very small lower shadow. Then it came right back up past its initial starting point, kept going up, kept going up, kept going up, went way up. It got overbought. This is what happens when it gets overbought. It got overbought. When you see a long upper shadow on a green candle, when you see a long upper shadow on a green candle, it comes down when people start selling off, because what happens is all the holders of the coin see the opportunity to sell, and it quickly gets bought back down. Because they're supplying it and circulating it back into the market, it brings back down the value. And everybody else trying to get in on this upper shadow right here is driving down the value as they're selling. So it opens here again, it starts to drop down, but then it comes right back up, thus creating the actual thicker, wider part of the candlestick going up, and then it just goes way up, and then it immediately falls back down and overlaps itself. Right where it overlaps itself, it transitions. And because it was overbought and the sellers just sold so rapidly, and you had tons of volume happening at this time, it then transitioned. And because of that, it continued to go down. And what was created from this? We saw a bull market of consistently upward trending market, and we saw it transition into a bear market. So bull market going up, going up, going up, going up, receiving lots of support. People are buying it, driving up the value. And then the sellers see a huge opportunity to make tons of money. They all sell at the same time, drives the value down. The supply is huge. The supply is greater than the demand. It drives down the value. Just like supply and demand, guys. The supply is greater than the demand. Everybody's selling now. And people start selling, and then this creates a bear market. So now we're moving into a bear market. It opens. It kind of stays here for a second. It just starts going down. It starts going down. It starts going down. It starts going down. Drops way down. And then it bounces back up because it meets a historical level of resistance. Do you notice how here, right here, it's kind of in line with right here. It's in line with right here. It's in line in the future with right here. What's actually happening is it meets some resistance, okay? It gets some resistance to keep going back down, all right? And it goes back up and closes. So the red is the opposite of the green, whereas green opens here, it might go down for a sec, come back up past, thus forming the lower shadow, go way up, and then double back on itself. Where it double backs on itself, it closes. Well, if it closes here at the top of a green, that means it opens here at the top of a red. It may go up. In this case, it didn't. And if it did, it would have overlapped again, and you would have seen an upper shadow. It comes way down, way down, bounces back up, overlaps itself, and closes at the bottom of the red, thus starting a new cycle to open at the top of the red here, where it goes up for a little bit, comes back down, and that creates the upper shadow because it overlaps itself. It goes down, comes back up, overlaps itself again, closes, opens again here. Do you understand what I'm saying, guys? So lingo and terms to write down. Bull market, green going upward. Bull market, progressive market, on a pump. This is what we call bull market. Red, consistently red going down. Bear market. Lower shadow is the thin little stick below the candlestick. Upper shadow is the thin stick above the candle. Lower shadow, upper shadow. Green markets. Well, greens open at the bottom and they close at the top. Reds open at the top and they close at the bottom. Let's decipher this a little bit more, and you should be drawing this out and writing this down. So if you need to pause, play, repeat, feel free to do so. What's actually happened, like say we were to look at just this cycle, for example, right? This was the lowest of the low of this cycle. This was the highest of the high for this cycle. This was the open of the cycle right here. This was the close. So we have 4 points in here. We have the open right here. We have the close right here. We have the low right here. And we have the high right here. That's the 4 points of a candlestick. Lower shadow, upper shadow. We have the entrance, the open, and the exit, the close. Thus on a green, we have the open on the bottom, the close on the top, upper shadow, lower shadow. Some indicators towards the direction the market is moving in. When you start to see a long lower shadow, not always, but it's oftentimes a good indication that the market's going to continue to go down, especially when you start to see them a couple times. This one's huge. There's no upper shadow at all. This one's much bigger than the top one. This one, not so much, but as you look as the new cycle started, it continued to go down, and then it continued to go down more, and it dropped. This would have been a great time to buy. So if you're actually looking at, if we're actually just looking at this day right here, and we learn to recognize indicators such as this, it becomes less important or less relevant where the coin was last week, last month, last year, 4 months ago, 8 months ago, and it becomes more relevant what's actually happening in the chart, the trends we're seeing. And you're actually going to learn basic and advanced methods and patterns that you will actually be able to see and decipher inside these charts. You'll learn this later on in the training, but right now I just kind of want to show you the basic strategies and some of the basic elements with Satoshi Value and candlesticks. So you can see we started going into a into a bear market. It started going down into a bear market. Good indicators are when we see longer, lower shadows. It's a good indicator that's going to continue to go down into a bear market. Well, it hit the bottom of the bear market, and lucky for me, I had a buy order in at 2,980 Satoshi. And like I said, it becomes much less relevant what this coin, what the market was happening last week, last month, last year, 3 years ago, whatever. It's much less relevant looking at that than it is to actually looking at the indicators that we can decipher by learning how to read charts in the active real-time markets. Because if you looked at this coin and say it was like way down, say it was at like 100 Satoshi this time last week, well, yeah, relative to last week, it was down, and it very well could be that it goes back down to that at some point. But for now, why not capitalize on the markets that are right in front of you right now if you wish to do so, and you will if you know how to read the charts. So let's talk a little bit about Satoshi Value. So it got bought down to 2,980. It kept going down, kept going down, kept going down, kept going down, and it didn't receive any support until right here when it started going back up, right? And it got brought back up in the market. It got overbought right here. This is what happens. Goes in a bull market upwards, goes in a bull market upwards, and it reaches a pinnacle where it just can't sustain itself anymore. It's receiving no more support to continue going in an upward bull trend because the sellers have brought down the market. You see, it couldn't get any more support as it started going up here, and it got oversold, and the sellers just brought the market value back down, making it a perfect opportunity to buy in right here at the low. So because of this trend that we can sense is going on, because of the signal that we are receiving an indicator that this is going into a bear market, and then it hits an all-time low for this period of time, we see that as a prime opportunity to go ahead and place in a buy order. Right about this point when I'm seeing that it's continuing to drop lower than its resistance points in the past. You see this? Its resistance points in the past. It's actually going lower than that. I see it as a prime opportunity to buy. I place my buy order in. And then, of course, the future shows now that it's starting its beginning cycle of a bull market, continuing to go in an upward trend, what we refer to as a bull market. We are seeing longer upper shadows progressively, thus being a good indication, a good signal that this is going into a bull market. We have now done a little bit of research. We have learned to read this chart a little bit, anticipating because of this longer lower wick and because it's progressively leading into another bear trend, another bear trend, another bear trend, another bear trend, another bear trend. It can only go so low. And what usually happens is the volume is continuing to decrease so much that it just can't help going any lower. It just absolutely cannot go any lower because it's receiving support. It's receiving buyers' support now to start going back up. The buyers start buying it back up, driving the value back up, creating some good opportunities for us to sell along the way. That's what happens. And one of the things that you can actually see is notice how the length of each one of these candlesticks is different. We're creating the most amount of opportunity when we see these longer candlesticks. You see, there's not a very big profit margin to really make any money when we have such a short candlestick. That indicates there's not tons of volume. That indicates there's not tons of volatility. So the volatility is happening, right here, right here, right here on this one, right here on this one, this bigger one right here, this bigger one here. There's lots of movement, aka volume. And at a certain point, what's happened is it said, look, due to the amount of sell orders in, the amount of buy orders in, what's actually happening now is there's more support on the buyer's side, thus driving up the value of the coin again because they're buying it up, buying it up, buying it up, buying it up. Less is available. It's becoming a scarce resource, thus driving up the value of the coin. So what we went ahead and did is we recognized this bear trend. We didn't know exactly how this is going to go down in the future, but because of this indicator, and this is one of many that you're going to learn in our advanced trading strategies. But because of this indicator, we saw, hey, you know what? This is probably a good indicator that it's going to be good to buy. And then we see a huge time where there's tons and tons and tons of volume. This is a signal based on all of these long lower shadows and this consistent downward bear market. This is a good signal that this bar here, being the longest, being the most volume, this is a good signal that in the very near future, it's about to go back up. So who knows, maybe it would have gone down a little bit more, but this is a good signal that we are coming to the end of a bear market and we cannot sustain going down any farther. Support just has to pick up, and it does. So we place in a buy order at 2,980 Satoshi, and it continues to go up. We see a trade opportunity. So what I actually did is you can see at, this would have been 1730 right in here, so 1830. I went ahead and I placed in a buy order, 1900, placed in a buy order at 2,980 Satoshi. We can see right over here, 2,956 Satoshi is 36 cents. This is about 37 cents, okay? And then we can see that it progressively continues to go into what turns into a bull trend, and it hits just over 3,500. Well, I had my sell in at 3,502 because based on other indicators that we're going to be learning later with our chart reading and our market anticipation, based on other indicators that we're going to learn later, I decided, you know what, I bet it's going to go there for a short-term profit, and it did. And at 3,502, I made my sale. 3,502 from 2,980 Satoshi was actually an 8-cent gain per coin. And over here, I already did the math for you guys. I had invested 0.2 Bitcoin, which this was a couple days ago. It happened to be worth $2,536 that day. Bitcoin altogether was worth like 13 and some change. So 0.2 Bitcoin, which was a $2,536 investment, bought me 6,711 Syscoin at 2,980 Satoshi. Recap again. Satoshi Nakamoto is the guy that developed Bitcoin. So the Satoshi value is simply an 8-character decimal point of which all our alternative currencies are judged on. So the Satoshi goes against the Bitcoin, okay? So we're saying that this coin at this time was worth 0.000298 Bitcoin, aka otherwise known as a Satoshi. So I bought 6,711 Syscoin at 2,980 Satoshi, which I then sold at an 8-cent profit when my sell order filled at 3,502 Satoshi, which created me a $536.88 profit, which is a 21% gain on 0.2 Bitcoin in a time frame of less than 3.5 hours. It's actually about 2 hours here. So a 21% gain. Imagine what would have happened if I had 25,000. I would have made a $5,360 profit. Imagine if it was 250,000. I would have made a $53,688 profit. Can you guys just imagine? So that's some of the indicators of learning the science behind candlesticks, understanding how they open, when they close, what the lower shadow is and the upper shadow, what those actually mean, understanding the 4 stages, the open, the close, the long lower shadow, the upper shadow, what it means when you have a longer lower shadow on a red bear trend, what it means when you have a long upper shadow on a green bull trend. That often means actually that it's overbought. So understanding these indicators can actually allow you to make qualified, educated decisions on when to enter and exit a trade for both long-term and short-term strategies. And we're going to be diving into more of that in our next bit of videos with basic and advanced trading techniques and fundamentals, signals and indicators that you can learn when reading these charts to understand which direction the markets are going to move, so you can literally become so good you're strategically placing buys and sells that are probable to fill based on the education you have. So you'll get to a point, guys, where you actually are able to make decisions, educated decisions, that you are always right on. You can always be right on these, and the only other variable is not knowing just how right you're going to be. How far the market is going to continue going up. How far it's going to continue going down before it does go up, and then how high it's going to go up again. But by being able to read these charts and understand even more, there's so many more patterns we're going to go into, you'll be able to make money every single day, guys. And we're also going to go over coin analysis, which coins to get into, what are the indications we're looking for to enter a trade or exit into a particular coin, looking at good coins like SIS and XLM and Power and Strat and Dogecoin, all these different coins. So we'll see you in the next videos where we're actually going to be starting to talk about the cycles of a trade, how to enter a trade, the common mistakes that new traders make, and the psychology behind how to have a successful trade. So we'll see you in the next video.